All right. So, hey, good afternoon, everyone. Thank you for coming on board on our live cast. All right. We are on, of course, on Facebook and YouTube. And today I have with us, of course, by popular demand, we have Art Smith coming back. He was very well received last time, so I'm happy to have him on board with us today. Of course, we have Gershom at the corporate office holding it down, and literally, actually today, Gershom, you literally might have to physically hold that down because it's kind of rough out here in Philadelphia.
Yes, the way things are, I may have to. It's a good thing I'm packing. I'm kidding, I'm not. I'm just kidding, I'm not. I am not packing.
Yes. Actually, my reception here is not too good. Can you guys hear me? Okay.
Yeah, I can hear you.
Okay. Yeah, I was having a problem earlier. Yes, and I was supposed to be. I wanted to be in the office to do this, but of course I came back here early because of the curfew. Um, and Art, how about you? How are you doing over there in Jersey?
Doing great. The weather, we had a wonderful weekend, lots of sunshine, people out on their boats. Great, great time this weekend.
Hmm.
So I'm happy to be where I'm at. I'm from Philly. I love Philly, but a lot of crazy stuff going on.
Yes, it is. And of course, the crazy stuff is, it's like it's what's going on here. What's going on in 2020? First we have that we have the COVID-19, all right, and that's a coming to well, we're Pennsylvania is getting started to reopen again, just about to, and Philadelphia just about to, and now of course what happened last week with George Floyd, right? I'm pretty sure almost everyone has seen that video, and I was watching the video, and I can tell you, watching that video, it's tough. It's really hard to see, and I know so many people get really emotional just by watching that. And now it's spill over to this. What about you guys? Do you guys get to watch that video?
Yeah, I watched it. You're right, it's very sickening to watch. Um, it's very it really tugs on your emotion when you see something like that happening. And so, I'm not one of those persons to condone looting and rioting and things like that. If you're going to riot, or not riot, but if you're going to protest, do so in a peaceful manner. But at the same time, I can understand the frustration of people. And then when you couple that with people being locked down, for 2 months, sometimes some places longer. So there's a lot of, I think, frustration that's been built up, and I think it's been let out right now. And unfortunately, whenever you have this situation, you're going to have peaceful protesters, but you're going to have those people who take advantage of that. The ones that want to riot and loot and steal and burn stuff, and it's unfortunate. But at the same time, I do understand the frustration out there, that people are feeling frustrated, and hopefully we can learn from this and have better relationships amongst each other for this country. So we'll see what happens from this, but it's unfortunate though.
All right. Yeah. How about up in Jersey? Is it pretty calm over there where you are, Art?
Yeah, I'm in South Jersey. It's actually very peaceful here. We're kind of in a more remote area. We're by the bay, and we're surrounded by like national wildlife refuges. It's Edwin Forsyth State Park and the Wharton State Park. So it's a pretty nice area between Brigantine and Long Beach Island.
Mhm.
And yeah, so my kids are here. We're summer's getting started, and it's unfortunate what's happening. It's terrible that one person makes a really, one bad apple can spoil the bunch, so to speak. It's terrible how that one guy, that those actions can affect so many people. It's
Right.
unbelievable. So
Right.
you know, there's a lot of great officers out there that do their job every day, and You got one guy that does, makes some really just ridiculous decisions. You just don't understand. It's crazy. I don't understand it. But hopefully, like Gershom said, we can all learn from it and heal. So,
Yeah. And unfortunately, you're right. There are bad apples out there, and yeah, what he did is totally. I don't see any excuse for it. It's horrifying almost to see, right? And what that costs, I think what Christian was saying, it costs. I think a lot of the maybe the racism, the all that anger that's being built up, and now because of what happened, people are the protesting. I'm totally for the peaceful ones, obviously, and all these riots that are, of course, no one's condoning those riots. By the same time, I think for some of these people are really releasing all the anger that they have, all the issues that they have. And over here, it's tough in Philly. Yeah, as you see, many spots in Philadelphia started in Center City where riots and looting were happening, vehicles were being burned, right? And then today, actually, one of my offices got ransacked. Right? Someone got. Luckily, they didn't break in, but they were throwing bricks, so our windows were broken. One of my offices up in Northeast. So what's happening right now all over many pockets of Philadelphia, or at least it happened last night, many pockets in Philadelphia. And tonight, of course, today the National Guard is called up, okay, and they are being deployed over here in Philadelphia area. So hopefully it'll be a little quieter tonight, all right. But one of the things that the racism, the anger that was being built up, and also I think is the income inequality, or wealth inequality, right? How you have people there are people who has multiple millions and billions. You have these really well-to-do, and obviously you have another class of people that are they're poor in the poverty line. And it's hard for them to get an opportunity to move up. I think that's another issue that's going on this. So it's so what we're doing sometimes I do feel is very important, right? But what we're doing is, yes, we're Bitcoin mining, but a little more than that. Our goal is also to get people more involved, not only into Bitcoin, but know more about financially. And that's why I'm so glad to have you on board on this podcast, Art. Because being a financial planner, you see that side of it, and the more we talk, hopefully we help more people, right, to get into more financial freedom, get into these assets, right, that normally you don't get, you couldn't get in, right? So.
Very true, Mr. G. Very, very
so
true.
Speaking of that, on how my connection is pretty bad, actually. I think whenever there are choppers flying around, actually, I live pretty close to Center City, so there's so many choppers that are really flying. I just got another emergency alert.
Yeah, I'm getting it right now too. The curfew starts at 6 p.m.
Right.
So I gotta try to wiggle my way out of here when we get done with this and try to get home before things intensify. But Art, kind of want to dovetail off of what Mr. Gao was saying in terms of the wealth gap, and I personally feel like with the monetary policies that we have, and with the money printing and all the bailouts and quantitative easing, I feel like that contributes to the wealth gap, because a lot of that money goes to the guys at the top, the Wall Street banks, big corporation. And to me, when you do those things, it just adds to the wealth gap. And I feel like in the long term, the middle class is really shrinking. And that's one of the dangers that, we're concerned about is, will we get to a point in America where we only have two classes of people, the rich and the poor? right? And so that's one of the concerns that many people have right now and have been talking about. How is this thing going to play out with all these policies that feeds all this cheap money to the top? So I would love to hear, what you think about that, and are those things that your clients are talking to you about, or those things that you guys discuss? I'm just curious about that, if you will.
I'll start by saying most of the people that I work with are, middle class. Most of the folks that I've done 401k rollovers and manage assets for really aren't a bunch of rich people. I have some wealthier clients here and there, but I must say most of the folks that I manage money for are regular middle class people who have started businesses and saved over time for retirement, or maybe the guy that worked as a maintenance guy at Johnson and Johnson for 40 years and then retired, rolled over a pension. I've had a guy that worked at PECO, Philadelphia Electric. He worked there from the bottom up, and he retired with a nice pension, which we rolled over. So I understand what it's like to see people. They worry about their assets. They worry about their future. Really, that's what my job is to try and guide them and help them make the right decisions on how to grow their assets and grow their, I wouldn't call it wealth. Wealth is like somebody like Warren Buffett. That's the wealthy guy. But the average person out there trying to save for retirement, it's behavioral, and it's people need to be better educated. We talk about wealth inequality. You can't just hand out checks to people. It's going to disappear and disintegrate after a few weeks, and you're back to the same old, same old. The way that people get ahead that I have seen, I'm 54 years old, so I've seen a few things over the years, and I can tell you right now that the people that get ahead are people that start businesses, work hard, and build those businesses up. You could be a landscaper without a college education, and you can build a big landscaping business and make millions. I've seen it. I know guys I grew up with that have done this. But then they also educate themselves along the way. Maybe they get into horticulture, or they get into other types of businesses where they can expand. So I would say education and practical education is the way forward for wealth inequality. And with that education comes, well, how do I invest? How do I save for the future? Well, that's where, you have to be diversified, and diversification is, in fact, you have to do it. So you can't, you have to understand, you don't have to understand all of the ins and outs, but you need to have some basic understanding on why am I invested in these stocks, or, or these companies, or this mutual fund. Maybe I should take an hour out of my day and read a little bit and understand how some of this works, because it's skin in the game, isn't it? Like, if somebody doesn't have any skin in the game, they don't care if they throw a brick through some guy's window, because they don't care about it. They don't care what that I would never do that, or, but I can understand how people get upset, they get frustrated. And then, like you said, the anger comes out and they just don't care anymore, and they're going to throw a brick through somebody's window. It's terrible that it has to come to that point, but the way to get these people engaged is they need to be working towards a goal. And that starts with a job of some sort, or starting your own business. And from there, then you got to start saving. You have to start investing, and invest in yourself. And that's how you get ahead in this capitalistic society. And there's nothing wrong with it. We need competition. We have competition of currency right now. So Bitcoin's competing against the US dollar, if you will. Bitcoin is saying, hey, we got a better way of doing it. We have scarcity here. We have Bitcoin has been, analogous with gold, but it's different, isn't it? So it's very interesting what's happening. I don't think Bitcoin's going to replace the U.S. dollar personally, but and I think the U.S. has been very resilient over the last 100 years. So you can't count them out. They got a lot of tools, in their back pocket. They're printing money. I got to tell you, if you're not diversified and you don't own some hard assets, and obviously cryptocurrency, Bitcoin being the front runner, you should educate yourself and be invested in these types of assets. So from a planning point of view, it's very simple. Diversify, but what does that mean? Learn about it, educate yourself. You still need to be invested in U.S. companies, because there's, look at Tesla. Look what they're doing. These are the companies of the future. So, I don't think it's gloom and doom. I'm not a gloom and doom guy. So I think that companies are going to innovate, and we're competing. It's a competition out there. China wants to be, they want to be number one. They want to have all the cool cars and put rockets in space. Why not? You can't fault them for that. And it's, I think, as far as the little guy definitely needs some help out there. People are scraping by, paying credit cards, paying high interest. They just got to start helping themselves. You know what I mean? And maybe we can help them.
And speaking of the little guys, and that's what Weebit, and that's how one way we help the little guy and people like us, right? We make it so easy for people, to get into Bitcoin mining, right? To get a piece of Bitcoin, and also, now Bitcoin is moving into the mainstream. Right? We have a long way to go. Bitcoin has a long way to go, but it's getting there. And they recently they just launched the 401k for Bitcoin and for cryptocurrency, right? James, do you pull that up? And that definitely really goes into retirement planning, and of course into more of your expertise, Art. So can you hear me?
Yeah. So Jin, with the 401k, it's just a good way to tax defer, right? You're going to earn your money at your job or your business, and you're going to invest in your 401k. So even if you're a business owner, you can have what's called a solo K. So let's just say you're the sole owner of a business. You can open a 401k. Let's just assume you're doing very well. Let's say you're a landscaper and you're cutting a lot of lawns or whatever. You're making a lot of money.
Mm-hmm.
You could open your own solo K, or maybe you got a few guys working for you. So you open a 401k properly. And I think it's great that they offer Bitcoin. It's just another asset class. I will say, though, I'm going to have to do more research on exactly what they're doing, because I can just tell you from my own experience, I've done 401ks for companies, and they have a lot of regulation on, what type of mutual funds we're offering inside the 401k, blah, blah, blah. And it really gets involved, and you have to keep records. The record keeping is very intense, but the point being is, hey, if you're a business owner, you can open a SEP IRA, invest in, Bitcoin, or I don't know if you can get the mining operation inside there. That would be an interesting, I don't know if that's possible, but I guess I'm assuming they're going to invest in like a fund or something that does cryptos, right?
Right. Yeah, it looks like that the companies that is rolling out the 401k, they call BigWage, and they're in partnership with Gemini, which is I guess the second most popular crypto exchange, right? You have Coinbase and Gemini. So yes. So I think with now we're getting more into the mainstream. Right, you're correct, Art. There's a lot of record keeping, a lot of paperwork involved in doing things like that, and having a 401k. But we're getting there, right? Bitcoin and cryptocurrency is getting there, right?
I, I think what's interesting is it's now. I just want to share something with you real quick. My niece, she's in her late 20s. She works for a health organization, and and my sister was telling her about the Bitcoin, and her aunt used to be a pretty big wig on Wall Street, right? She very successful. She's retired, and so when she asked her about this, she was like, "Oh, that's fake. That's like basically dismissed it." And then I said to her, I said, "Well, she's like, I don't understand. She said it was this," and she sent me a South Park video of everybody knows South Park, the cartoon guys,
Yeah.
and they had a little blip of South Park saying, "Oh my God, poof, my money's gone," and it was that's the clip that she sent her on her message. So I was like, well, I don't know what to tell you. Maybe do a little research, see what you think for yourself. But it's not fake. I mean, they're talking about it on Bloomberg. Companies are starting to offer it on their platforms. But there is a lot of education that needs to be given to people. Like, people just have no idea. They're like, "What are you talking about?" Because some people are really just totally removed from this world. And that's why the little guy never gets ahead typically, because he's the last to find out about it, and then it's already happened.
Right.
And, so I think what you guys are doing is great. I did my research before I jumped on, and I'm impressed by your company. By the talent at the company, and what you guys are doing. So that's what drew me to you guys. And I think it's a bit of a learning curve for people, to figure out, like, what the heck is this? What are you talking about? Digital money, and I just tell people, I say, hey, when you pull up your bank account on your phone, it's kind of like digital money, right?
Right.
It's not really there. What is it? It's just some ones and zeros on the phone. So I think, like you said, it's getting more mainstream, and we're starting to see that creep into the mainstream here. You're seeing it everywhere. People are talking about it almost everywhere.
Right.
As well, you watch Joe Rogan, they're talking about it, on Joe Rogan. You pull up Bloomberg, they're talking about it on Bloomberg. It's all over the place. So I'm just curious to see how far it's going to go.
Me too. I'm definitely excited to see where it's going to be next year, which we're going to talk about in a little bit later, on what some of these people are projecting, and what type of models are they following to get that projection. And there are different models, actually, different models arriving around the same price. So it's very interesting to see. Right. But about the CARE Act and the 401k. Because last time you were talking about, when you were on, Art, actually we have a few viewers actually that reach out to you.
Yes.
Right? How many exactly reach out to you? I know at least a couple.
I think there was at least two, maybe three. Just getting some information. I just tell folks, like, hey, I'm as far as investing in the 401k, I don't know how, it's not offered in many companies 401k right now. So,
Right.
That's really, if you want to invest in crypto, you have to do an IRA, and you could do that on your own. That's no problem. If anybody needs help with that, I can help them out with that. But, and as far as the CARES Act, we were talking about, a lot of folks have most of their assets tied up in their 401k or their IRA. And maybe especially with the virus and everything, some folks might be a little short on cash, and maybe they want to invest, but this is basically If you're investing in the mining rig, you're investing in a non-retirement type account. So it would just be a straight up investment. So we were talking about liquidity. Some folks had questions like, can I access my 401k or can I access my IRA? So under the CARES Act, if you were affected in some way by the virus, let's just say, hey, you got furloughed from your job, or you were, maybe you're only working 2 days a week instead of 5 days, or whatever situation is, you were affected in some kind of way, or maybe your husband or your spouse, your wife, your spouse, was affected by their work, their employment was affected. Then yes, you could actually access your retirement account up to $100,000 without the 10% penalty if you're under 59 and a half. So that's a nice way. They created some liquidity for people. And then the other part was you could spread that. You still have to pay income tax on it. So it's not like, hey, I don't recommend you do that unless you really need to. Or you feel that it's a good investment, or that's a personal decision you have to make based on your financial situation. But just letting people know, hey, this is an option. You can access those funds without the 10% penalty. You can also stretch the income over 3 years. So let's say you took 30,000 out, you wouldn't have to pay the tax. You'd only pay tax on 10,000 per year. You'd add that to your income. Over that, you spread it out over 3 years and let it, instead of having 30 grand added to your income in the current year. So it gives people some flexibility.
Right. Good stuff. Right.
All right. One of the things, real quick, Mr. G. So for the 401k, a couple of things real quick. Definitely glad to see that. Even though we still need to learn more about it, but the fact that it's being discussed in the mainstream as a 401k plan, I think is big, huge news for Bitcoin. And to your point, I'm still surprised when I talk to many people and they're still saying, oh, that's a scam, or what is that? With all the information out there about Bitcoin, like, how do you not know about this? Like, what's going on? And you're right, it's that people don't take the initiative to get involved and educate themselves. And that's why oftentimes the little guy gets left behind, because, it doesn't take the initiative to find out and get involved with it. But I wanted to ask you, the 401k plan for the Bitcoin, will that necessarily require anyone that get involved with that in the 401k side will need to have a securities license?
Well, no. What the way it would work is, let's just say, Gershom, you have a company. Let's say you have 50 employees, okay, and you said, hey, Art, or whoever, you talk to any advisor, or let's say you call up Vanguard and you say, hey, Vanguard, I have a company here. I need a 401k. I want to offer this to my employees. I want to be a good owner and offer 401k because it's a benefit to your employees, right? And because you're maybe matching their contributions, and that's all part of retaining good talent in your company. So 401k is really a benefit to an employee, but the onus is on the employee. So back in the day, we used to have pensions and defined benefit plans. That was grandpop's retirement plan. You got a pension, and it accrued over years of service. Nowadays, it's 401k, and the IRS, they created the laws to help promote saving, but there's no guarantee. Let's face it. So they took the liability from the company. Companies are saying, hey, we don't want this pension liability. Now they shifted that to the employee. But if you work for a company, hey, maybe I'll work for Gershom's company instead of, Joe Bob's company, because Gershom's offering me a 3 or 4% match for every dollar, and he's also has a 401k that allows Bitcoin, and it promotes itself as a benefit to the employee. So if I'm looking at your company, Gershom, and another guy's company, the 401k could be a differentiating factor on why I might work for you as opposed to the other guy. So for myself as a planner, when I'm talking to an owner or the management of a company, and there's, most of them look at it as kind of a pain in the neck, like, hey, we have to deal with this, and it's an expense for them. So depending on the company that you're working with, some of them look at it as, I mean, they can write off those expenses, but what we try and convey to those owners is like, hey, look, you want to make sure you're in compliance with ERISA. ERISA is the law that came out, regulating retirement plans, 401k plans. So you have to make sure you're abiding by all the laws of ERISA. And in most companies that, if it's a Fortune 500 company, it's going to have a 401k. And then as far as what they offer in the 401k, well, that's where a guy like me comes in and says, hey, let's make sure you're offering your employees, the best options that are out there. And let's make sure it's diversified. Like, Vanguard could administer the plan, but we want to make sure we offer all different types of investments from, maybe American funds or Fidelity or whoever. And, we want to offer ETFs or, whatever the case may be. Really, the employer wants to make sure they check those boxes. So it's going to be interesting to see what kind of, under the regulations, how Bitcoin's going to get integrated into 401ks. That's going to be interesting to me, how they're going to do that, because right now I can tell you Bitcoin and cryptocurrencies looked at as a speculative investment. So in our world, it would be considered speculative. Now, when they set up a 401k, they typically go with the basics, large cap, mid cap, small cap, maybe some bond funds. You got a stable fund in there, and they kind of check all the boxes. The owner's covered under the regulations, but maybe they're going to start offering some other types of asset classes. So that's it's going to be interesting to see. But to your point, Gershom, if they do start adopting it into 401ks, it's only going to be a big push or a promotion for Bitcoin, which is, I guess, the goal here is to try and get more mass adoption. So, because obviously, the more people use it, then it's going to push up the price. It's going to be great for everybody who's involved.
And also, just to talk about what you said earlier about your niece, and was it your sister that said?
Yeah, it's my sister Lynn. So and Skip, right? Shout out to Skip McCoy out there. Skip's kind of responsible for me getting into this. But Skip went to school with my sister.
Okay.
And my sister's very skeptical. She's like, I don't know, she works for a divorce attorney. So, she's like, I don't understand any of this finance stuff. And she's like, she understands the law, but she doesn't understand anything to do with finances. And so she says, hey, what is this Skip keeps talking about? And then her daughter is Leah, is my niece. Mm-hmm. And she's very sharp, very smart girl. And her aunt on the other side of the family was a big Wall Street trader.
Okay.
And her aunt basically dismissed it as, she's retired now, but she dismissed it as, she sent her to South Park thing. Or and said, oh, that's fake. Or, just dismissed it like, it was nothing. And but I just saw her over the weekend and we had a chat. And, I just said, hey, guys, her and her boyfriend, I said, hey, look, her boyfriend was very interested. He was like, how does this work? And blah, 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 and he knew, everybody seems to know a little bit about it, but there's a lot of misinformation out there.
Right.
I mean, everybody seems to know a little bit to make it dangerous in a way. You know what I mean? Like, I don't know. I'm like, no, that's not exactly how it works. Or no,
just enough to spread misinformation, right?
Yeah, it's just, that's what I'm talking about. Like, it's a little frustrating sometimes. And sometimes I don't even say anything because I don't know. Sometimes you just throw your hands up like, whatever, guys, just go Google it or do something. I don't know.
And especially when it comes to family. Sometimes when it comes to family, yeah, you just say, throw your hands out. Okay.
But we had a discussion, and basically she realized like, hey, yeah, I understand it's not fake, but and I said, hey, you'd be surprised. There's a lot of smart people out there that just don't understand it, or it's not their thing.
Right.
It's not what they do, you know.
And James, can you pull up that article on Clash of the Titans, the J.P. Morgan and Goldman Sachs article? Okay. All right, that article. I mean, last time actually, we talked about J.P. Morgan, right? How Jamie Dimon really poo-pooed on Bitcoin. He was saying Bitcoin was a scam.
Yeah.
Right? That was, when was that? 4 or 5 years ago, right? That was back then.
Yep.
Yeah, I think about maybe 4 years ago, right? So yeah, how he said that Bitcoin is a scam, and it's also proof nothing. And then later, a year later, they have their own J.P. Morgan coin. They're working on their own cryptocurrency, right?
Imagine that.
So we were laughing at that, and then they are the major bank that does banking services for the two major cryptocurrency exchanges, right? For Coinbase and Gemini. Now, J.P. Morgan is pretty much into crypto, and I think they're pretty much a believer, right? But now there's another company out there, another Wall Street company, Goldman Sachs, saying pretty much the same thing what your niece aunt was saying, right? Bitcoin is nothing, it's not an asset, is comparing to the tuna mania, the Dutch tuna mania.
Right, tulips.
So that's what Goldman Sachs is their report is. That's what they're telling their clients, right? But I think why they're saying that to their clients, it could be a couple of reasons. I think one is to kind of like depress the price of Bitcoin. I think they're trying to get into it. Is either that, or they're really losing to their competition. Their biggest competitor is J.P. Morgan, right? Goldman Sachs. The biggest competitor is J.P. Morgan. So most likely, J.P. Morgan is going to do all the banking services for these crypto company, and then later when they do decide to go public, J.P. Morgan will be the main underwriter. And to me, I think Goldman Sachs is just
sound
like
great. That's so funny.
Right. So what are your take on that?
So Goldman Sachs, they were one of the ones in the 2008 financial crisis. It was found out that Goldman Sachs, while they were putting their clients into certain investment vehicles, they were on the other end betting against those same vehicles that they're putting their clients in. So their credibility, as far as I'm concerned, it doesn't hold water. But I wanted to because someone texted this to me, so I wanted to tell you guys some of the things that they were saying there, that negative things about Bitcoin. So they said Bitcoin do not generate cash flow like bonds, and I kind of want to hear your take on all these, Art.
Sure.
So they said Bitcoin do not generate cash flow like bonds. They say Bitcoin do not generate any earnings through exposure to global economic growth. They say Bitcoin do not provide consistent diversification benefits given their untenable correlations. And I say Bitcoin do not dampen volatility given historical volatility at 76%. And then they say Bitcoin do not show evidence of hedging inflation. So kind of want to see, do you, I wanted to see, pick those things apart, pick those negative arguments that they put forward to their clients as to why they shouldn't get into Bitcoin.
Well, I mean, let's just start by saying, if you compare Bitcoin to gold, which it's been, that's the best way to describe it, as digital gold, right? So it does act like gold from an asset class point of view. Like if you're holding the coin, so to speak, even though it's digital, it acts like gold in a way that, yes, because of the scarcity, right? Because there's only 21 million Bitcoin ever produced in the world, correct? So there's scarcity like gold. So the gold miners go out there and dig for gold, and they're only going to get so much. And So yes, it'll act like gold, right, from an asset class point of view. But then it's a currency. Like gold was a currency for thousands of years, right? So it's a currency and it's a hard asset if it were gold. So what Goldman Sachs is actually correct. It doesn't generate if you hold Bitcoin itself, you would be holding it for hoping that it would appreciate in value, right? Just like gold. So, you know, just from that point of view, that's how I would look at it. From a planning point of view, I'd say, hey, maybe you should own a certain percentage of Bitcoin, just like you would own a certain percentage of silver or gold in your portfolio, or maybe you own an ETF or a mutual fund that invests in the currencies. So they are correct. Like if you own stock in a company, you're getting a piece of the earnings, right? So they are correct on everything they're saying is correct, but what they're not saying is, and it is true, we don't know for certain if it is an inflation hedge. It still has to play out. So they are correct. Everything they're saying is true, but what they're not saying is, hey, this thing could be widely adopted as a form of exchange. And if this happens, you're not going to have any access to it because we're not offering it to you. So, how would you feel like if, your friend said, hey, Gershom, they got this new thing called the internet. I know you never heard of it. There's this guy, Steve Jobs, and, they got this company and I think you should buy some shares of this company. And you're like, oh, that just sounds crazy to me. I'm not going to buy any of that. That sounds too scary for me. I'm not going to do that because you don't know what it is. Let's face it. Back in the 80s, we didn't know what the internet was. I was in college back then, and we didn't know exactly what the internet was or what. Even computers were pretty primitive back then. So Goldman Sachs, you can't trust these guys. They talk out both sides of their mouth. I mean, they are going to position themselves, like Jin was saying earlier, like one day we're going to wake up and, Goldman's all of a sudden they're going to be offering Bitcoin ETFs or something, or they're going to be, investing and doing all this crazy, like we don't know what they're really doing behind closed doors there. So I think what's going to happen is they're trying to figure out how they can capitalize on this market. And once they figure it out, they're going to do it, and then we're going to find out about it later. So you really need to just do your own research and see if you feel comfortable owning Bitcoin as an asset class. And then secondly, I mean, I like the mining personally because you are, VBit is taking care of your rig for you. They're guiding you through how to do it. They're saying, hey, we're going to stay ahead of the competition here. We have our electricity costs figured out. We can make this efficient. So just from the mining operation, that's where people need to do research as well, because not all mining operations are equal. Not all companies are approaching this the same way you guys are. So, that's why, I think the mainstream, by the time it becomes mainstream, it's already too late, basically. And Goldman's they have to say that, Gershom. They can't say that Bitcoin is the best thing, since apple pie. They just can't say it because they're going to catch too much slack and for saying it. They have to kind of do what they're a traditional organization. They have to do what they're set up to do right now. But I guarantee they're looking at it and they're probably going to capitalize on it in the future.
Yes, that's how I feel too, Gershom. Right? It's you're right. It does not generate any cash flow, right? But like I was saying, like same what were you describing earlier is just like gold. That's exactly what gold is. Yeah, and gold did not. Well, we're still too early in the point to say Bitcoin is it's not hedging against inflation. And I think it already has. If you looking at in terms of the price of Bitcoin and to or the buying power of Bitcoin to the buying power of the dollars, right? It's already there. So I don't get that part. Also, James, while we talk, can you pull up the next article, the stock to flow model, right? Since we're talking about gold, right? And with gold, what can you do with gold, right? Yeah, people use it for jewelry, right? And then of course people use it as an asset, but it's hard to use gold as a currency in turn because it's yeah you have to divide that up. You have to carry that around, right? Which is pretty tough to do. And then later, of course, the government were using the paper to carry that around and pretending that that's gold, right?
Yep.
But with Bitcoin, Bitcoin's the digital gold. It's divisible, and it doesn't get worn out, doesn't get lost, right? And it's divisible in such small parts that you can do it very very precisely. All right. So what about you? What are your thoughts about it, Gresham?
Well, I kind of know how these big banks and these big institutions operate. They'll tell you one thing while they're doing something else.
Mm-hmm.
You know, just like J.P. Morgan, when Jamie Dimon was saying that Bitcoin, is nothing but only criminals use it, and if he ever find one of his traders trading it, he would fight him on the spot. And come to find out, he had one of his division over in Europe buying up Bitcoin and trading Bitcoin. So, you can't believe these guys. And I think what Art said, I think, when it's all said and done, we're going to find out that Goldman Sachs was already involved with Bitcoin, even though they're telling their clients something else. They're known for doing that. So that's their MO. That's how they operate. But yeah, I believe, they're trying to figure out how they can capitalize on it. But like Art said, at the same time, they cannot go in and embrace it because their business model is built on the traditional financial structure. So for them to now embrace Bitcoin in a big way, they will be pretty much, dismissing what their bread and butter is built on. So yeah, they probably can't do that right now. But
right.
In the long run, just like J.P. Morgan, had to, they came around. I think in the long run, most of these big institutions, they will eventually come around because we all know that, Bitcoin is not going away. So we'll see.
Yeah. Now, do you guys, this article actually, I think it was posted on Telegram by one of our members about the stock to flow model. And actually, James was talking about it this morning before one of our members posted. It's saying that Bitcoin could surge to $100,000 by 2020, by next year. Right? Did you guys get a chance to read that article?
I hope it does, Jin. I'm going to hold you to that.
I have heard multiple analysts, and these are not like, your everyday run-of-the-mill type guys. I'm talking about guys like Max Kaiser, guys like Anthony Pompliano, some really, players in the game. And, they're saying, look, and don't be surprised if by the end of next year we see Bitcoin of $100,000 per Bitcoin. Sure. Now, it sounds far-fetched, but think about it. When Bitcoin was 5 cents a Bitcoin, did anyone ever thought that Bitcoin would get to 20,000? Can you imagine when Bitcoin was only like a fraction of a penny back in 2009 when they were first playing around with it? And if someone had told those guys, hey, look, by year 2020, Bitcoin's going to be 9,000 and change, they would laugh at you, right? So when I hear these analysts projecting these numbers, it sounds far-fetched, but I wouldn't sleep on it. This asset class has done some things that has made the average person scratch their head going, what? So could it go to 100,000 by next year? with the money printing that's going on, with all the bailout and the quantitative easing and devaluing the currency, and I think it's possible.
Right.
Definitely think it's possible.
You have what's going on in the real world, like those crises, the quantitative easing. That's really what's going on. And then you also have the technical experts or technical analysis is also pointing to that similar direction. Right. This most recent article, this one, the stock to flow model, right, looks like made popular by this guy called he calls out Plan B. Right. That's a Plan B. So in this article, what the stock to flow model is, it's about how often how long does it take for you generate a resource. For example, you have an asset like Bitcoin, right? They have a total asset out there in the market right now, and how long does it take for it to generate that asset, right? Like if you generate it in 1 year, like for example, well, in this model, what it's saying, it takes about 50 years at this current generation, at this current mining difficulty, right? At this current rewards, it takes about 50 years to generate enough Bitcoin for what's out there in supply right now. There's about 18 million. There's 18 million Bitcoin out there right now, about a little more than 18 million Bitcoins out there right now. So at current production, at current mining, it'll take about 50 years to mine the current supply of Bitcoin. So that model, it's been as the number goes up, if it's harder and harder to mine, or harder for this number, for this stock to flow number, the higher it is, the higher the price, right? So what he did in this model is he kind of like extrapolated also from past data to now, and that's how he came up with the price, right? So he came up with the price of after this halving, right? That just happened a few weeks ago, or about 2 weeks ago that the halving happened. So that model is predicting that in year 2021, by year 2021, around there, Bitcoin price should be around 100,000, right? And with the same model in the next halving, right, which will occur, the next halving will occur in 2024. So the same model is saying in about year 2025, that's when it'll hit about $1 million, right?
Whoa.
Right. So 2025. So that's why a lot of these analysts are getting the numbers. Right? They have their own different models of doing it, and this is another model. But all the models and all those current events, and even people don't use these technical models, right? They're just basing on what's going on current events and what Bitcoin is built for and made for. So all these conclusions are coming into similar numbers. Right? So I don't know, is it coincidence, all these models and all these people's projection or estimate, somehow they call each other, or they have a secret group together that they all talk and come up with the same number. But that's what it is. Right?
I think, when you look at Bitcoin and what Bitcoin is, and how and why Bitcoin came about, right? And then when you look at what's going on right now in the world and in our own economy, it's not that difficult to believe that could possibly happen, because Bitcoin was made for these times, right? The money printing, the uncertainty, the lack of trust, chaos like we have right now, demonstration and all that. So Bitcoin was made for these times. So yeah, $100,000 by next year sounds like a lot, but I remember in 2017, the beginning of the year, Bitcoin was like $1,000, right around there somewhere. And then by the end of that year, Bitcoin had touched 20,000. I mean, it came back down from there, but in 1 year, it went from $1,000 to $20,000. So, and we didn't have the halving, right? I mean, we had passed the halving,
Yeah, we
but
did.
we didn't have all this money printing right now that we have. We
Right.
didn't have all the uncertainty, right? So, and then, like you said, Mr. G, so you have the fundamentals that's saying that, hey, Bitcoin is about to explode. And then you have the technicals saying, hey, Bitcoin's about to explode. I mean, who am I to say no, right?
Mhm. All right. What about you, Art?
Well, I look at it this way very simply. If you look at safe haven assets like gold or silver or
Mhm.
real estate, hard assets, typically if there's uncertainty in the market and folks are looking to jump out and go into a safe haven, they go to cash or they go to treasuries or they go to gold, right? So typically, to stay liquid, they're going to go into treasuries. But to your point, Gershom, you're right. We're kind of at this crossroads here where, wow, we got through the financial crisis of 2008. Prior to that, we got through the Enron, um, scandal, and then we had 9/11. So we've had these two major events in the last 20 years, and now we have this pandemic, which has kind of been predicted. I mean, we've seen Hollywood movies, about it, Outbreak, all this kind of stuff. It's almost like it's been planned in a way. Um, I don't know if you're a conspiracy theorist or not. Maybe the aliens are here already and this is all part of the plan. I don't know. But if you look at it very simply, for the case for Bitcoin is simple. If it becomes adopted as a digital gold or a digital the currency is now more adopted and more widely used, then those models make sense, because I think what these guys are saying is like, look, if the rate of adoption happens at X, and even if they go conservative with that, within a few years, Bitcoin's going to be used as a mode of exchange, and then the more people that are holding it, it's just going to, and the more banks that are getting involved, and people are trading it and getting involved in this asset class. Obviously, it's going to push up the price because the scarcity of the model is already built in. So Satoshi Nakamoto, whoever this fictitious person is, or a group of people, they invented a very as long as the integrity of that model is a trusted model amongst the citizens of the world, then even if only a small percentage of the citizens of the world adopt this as a currency exchange, then yeah, it could certainly go to $1 million because of the scarcity. So that's how I look at it from a scarcity point of view. Just like gold, it's the best way to kind of think about it, because diamonds or gold or something is scarce. That's why it's worth so much money. That's why the Mona Lisa is worth so much money, because nobody else could paint a picture like that, a certain way. So
Right.
So in times of uncertainty, which like right now, you could say, yeah, people are scared. I mean, like they don't know if they have a job tomorrow. They don't know if they can go back to work. If you had a small business, maybe you're bankrupt now. You're cash flowed out. You put your whole retirement savings into a business. Now now you're broke. I mean, you got it. That's why I always talk to folks and I say, hey, make sure you have like a backup plan, or make sure you have some savings for emergency. Work on your debt. Obviously diversify your investments, and if you do those basic things, you can kind of weather most of the storms. But what we're facing right now, 14.5% unemployment, now it's getting scary, because if folks don't go back to work, we got a real problem on our hands, because getting back to where we started in this conversation, if the little guy has no skin in the game, he gives up and just starts, beating people over the head, now we don't have a society, so we, hopefully the way I see it is we're in uncertain times. And, if you look at the Kaiser report and some of those other folks that you named in on this program, they can get those valuations, I think, just based on a percentage of transactions over the next, 2 to 5 years. And they're saying, hey, if Bitcoin is adopted at a rate of X, and then you have the next halving event creates more scarcity, the mining difficulty goes up. Yeah, it has that if the integrity of that system is trusted, just like people trust that, that dollar, that US dollar, that piece of paper in their hand is worth something. And that's where we're at. We're at this crossroads where people are starting to second guess, oh my God, is the US dollar going to survive this? I mean, they're really printing a lot of dollars. I mean, there's $7 trillion is, a lot of, I don't care what kind of GDP we could go for, like Trump. I know Trump's, he's love him or hate him. I know he's trying to get people working and get the GDP up to make himself look good. But, the GDP, typically that was the case. Like if we can get GDP to X, then, we can push through this. We can pay it off. Our future earnings are going to be able to pay off this debt. It's just like, Gershom might say, hey man, I'm going to go work for this company. Don't worry about it, Jin. I'm going to pay off that $25,000 credit card, because I'm going to be making, big money at this new company. So the US is making a big bet right now, a big bet. And if they don't do it right, then it could really get ugly fast. And then, like the Kaiser report, that's what they're saying. Hey, this thing's going down, and you don't want to be in dollars. You want to be in gold, or if Robert Kiyosaki, he's saying you own real estate, you want to own gold. Other guys are saying, yeah, you need a piece of the crypto.
Yep.
So
I'm definitely saying you need a piece of crypto. You need a piece of it.
Well, the thing is, everybody's saying something, right? Why? Because they all see that something have to happen. So yes, we are crypto people. We are Bitcoiners or Bitcoin miners. You have some guys over there that saying, hey, you got to get into gold. Some guys are saying, hey, get out and hold cash or whatever. But the thing is, whatever your thing is, the fact of the matter is these guys see that something is coming down the pipe. Something is going to break. And you need to be in something that's not correlated directly with the system as it is. But what I wanted to say, the way Bitcoin was designed, it's absolutely brilliant. And I want to touch back on what you were saying, Art. The people, whether it's one person, Satoshi Nakamoto, or a group of people, it's almost like they could see the future. Because think about it. As the popularity in Bitcoin is gaining, the supply is shrinking. How do they know that, right? Because where are we right now?
Hey, sorry to interrupt.
More popular.
I think they're aliens, Gershom.
It is. I mean, like, I think about this thing, and I'm like, wait a second. How do they know this? Because we just had the halving, and now Wall Street guys are getting in. Paul Tudor Jones, hedge fund guys are getting in. Grayscale is buying up all the Bitcoin. I mean, at the same time, when the Wall Street guys are getting in, and the average guy in the street, at the very least, they're hearing about it. The popularity is building up. At the same time, while that's happening, you cut the supply in half as far as the mining. So can you imagine when the popularity is even more 4 years from now, and you cut the supply again? It's in its design, it's amazing, and that's why these people, these brilliant people, these billionaires, and the more they look at it and the more they examine it, it's like they're saying, whoa, we have to be in this thing, because the way it's designed is, it's almost like it's flawless.
Yeah, I'm excited. I'm excited to see what Bitcoin's going to be. But it is around that time, guys. I appreciate you guys. It's been a lot of fun. All right. I'm just excited to see really end of 2021. There's only what, 18 months ago, 18, 19 months ago before end of 2021. So we'll see. We'll see if we'll hit that price that all these models are predicting and all these experts are predicting. It's going to be very exciting to see. But also at the same time, we're talking about how to get the little guys like us also get a piece of the game, right? Get our skin in the game. So it's up to us to go out to spread the words and get people into Bitcoin and Bitcoin mining. All right. So anything else, guys?
No, that's it. I gotta try to get out of here. The curfew has started, so I hope I can get home without too much issue.
Right.
But besides that, yes, we're gonna have the podcast. I mean, the webinar tonight, guys. I more than likely be doing it from home, but we're still gonna have it. So make sure you guys are on at 9 o'clock tonight.
Sounds good. And if you get arrested, you someone bail you out, you call me.
Hey, Jin, send over Gershom. Jin's going to send over the chopper and pick you up. All right.
Okay, thank you. That's what I need. I need that.
I'm gonna wave it down. Right? The police are up there. I'm gonna wave the chopper down.
Just look up, right?
Go up. Yeah, go up.
All right, thanks, guys. You guys have.
Thank you, Art, for being on, man. Hey, Art, we got to have you on again, buddy. Yeah.
Hey, I can't wait till this virus is over and we can hang out again.
Absolutely, man. Our people, they love you. The information that you bring to our members, man, they love it. It's totally valuable. They love you. They love your information. So we can't wait to have you on again. And definitely, when this thing is all over, we all get together and break some bread for sure.
Oh, I would love that. Yeah.
Absolutely.
Thank you so much. Appreciate it. I love being here.
Absolutely. All right, guys. You guys take care. And we'll see you guys tomorrow. Well, tonight for most of you, and tomorrow for our training webinar as well. You guys take care. Have a nice evening.